Hi, everybody. Thanks for joining. This is Allan Krans. We're just waiting for a couple more people, give some people some time to join the meeting, and we'll start in about 3 or 4 minutes. Thanks. Once again, hi, everybody. Thanks for joining. We're going to start in just about 3 or 4 minutes. All right, everybody, we're just checking the audio. If you could leave a comment to let us know that that's working, it would be greatly appreciated. Thanks. All right, we have a couple of our presenters rushing from other meetings, so hold on just another minute and Nikki and Katie will join and we'll get started. Thanks. All right, thanks everybody for letting me know that the audio is working. It's always interesting to do this on your own for the first time. So thanks for joining. Welcome to TBR's webinar series. Today I'm going to be joined by analysts on my team, Senior Analyst Nicole Catchpole and Catie Merrill. And we're going to go through what we're seeing in terms of how cloud vendors are expanding their go-to-market toolkits. So before we get started, there's going to be a couple housekeeping items that I'll take you through. If you aren't familiar with the platform, there's a series of buttons. You can submit questions down at the bottom. Please do that at any time. And then after today's session, there'll be a survey if you wouldn't mind taking a few minutes, filling that out so we can make these future sessions as valuable as they can be. Also reach out and let us know if you'd like a copy of today's presentation, and you'll all receive a link to the replay so that you can, if you miss any parts or want to listen again, or you can always share with colleagues. And so without further ado, we'll get into some of the content of today's session. And really there's three areas that we'll go through, so each of us will cover part of this. The first is what we're seeing in terms of how go-to-market is becoming a group activity, and we're seeing more and more partnerships amongst vendors of different types in terms of technology and also services coming together to evolve the way that they're going to market and react to things that have been changing for quite some time, and then obviously the more recent impacts of the pandemic and COVID-19. Secondly, we'll go through some of the new markets, and that includes both geographically as well as industries that we see vendors entering, and we'll go through how they're doing that and where that's occurring. And then lastly, we'll close with a little bit more discussion of the changes that we're seeing due to COVID-19, so things that'll be short-term adjustments, we believe, and then also some of the shifts in terms of the sales and marketing strategy that we think are going to be longer term, even once things resume to a more normal environment as the effects of the pandemic hopefully subside. And so with that, I'll hand it off to my colleagues to take us into the first section.
Thank you, Allan. Hi, everyone, and thanks for joining. This is Nicole Catchpole. As Allan mentioned, I'm a member of the cloud team at TBR. So Catie and I will take you through the first point of go-to-market being a group activity. And with that, it's clearly an understatement to say that the topic of partnerships, alliances, and best practices is complex, with many, many versions of what go-to-market looks like even within one company. And so asking a globally dispersed company about their alliance or partnership strategy is really the opposite of a simple question, and always has nuances based on factors like who you're asking, what their role is, where they're located. And answers could differ across a sample of factors such as what are their strategic goals, what are the company dynamics look like, what the KPIs look like, and just overall go-to-market implications. So how this complexity relates to toolkits, being the topic of the webinar, is our blanketed recognition that in today's increasingly diverse and shifting environment, toolkits, what people bring to market, have to be just as diverse, flexible, and complex as the customers that are served. And I won't beat the analogy to death too much, but the concept, as I like to think about it, relates to the fact that, a wrench that fixes, say, a particular sink in the US may not fix the same issue in a similar sink in France or in China, and that multiple toolkits, even held by the same builder, may not be enough to satisfy the demands of an enormously complex, complicated, and nuanced market, which has, as Allan mentioned, and which we'll round out the session on, has only become much more so within the last 6 months due to COVID. Now, the trend of one-on-one relationships with the 5 to 6 largest technology vendors, which persisted probably 10, 15 years ago, has gotten a whole lot broader and is much less one-on-one now and more many-to-many. And there are so many great examples out there. And one stat, just kind of, which I think is interesting to kick this off with, and that I came across just this morning to demonstrate the overall importance of partnerships, is one from Google Cloud, where Thomas Kurian a few months back stated that partners have brought 85% more new customers to Google Cloud just in 2019 than the prior year, and that partner source revenue grew by 195%. And you can't really ignore numbers like that. And I think it just underlies the importance of partnerships, the prevalence in the global marketplace, and why they are a primary factor that we're highlighting here today. So to take you guys to the next slide, the continuum here shown is not meant to minimize or bucket the complexity of partnerships, but really to speak to the range of relationships that both drive and respond to marketplace activity. On one side of the spectrum is this resounding and in some ways almost trendy call to be open, share, and co-develop, and it's one that some vendors have really embraced and others have reacted much more tentatively by being more protective and proprietary over their data as well as the data of their customers. The establishment of open communities and structures fosters, of course, collaboration, co-development, and are increasingly popular in these developer communities. And a community-based open source development model means that as a project gains traction, it'll better fit user needs since open source makes users part of the actual development process itself. And I'm sure as many of you can relate to, it's really an understatement to say that there's never any silence on the end of the line when broaching the topic of open source. It's an incredibly complex and nuanced topic, and one that really ranges based on industry, again, geography, and who you're actually speaking with. Now, again, regarding the open side of the spectrum, to get into specifics, I think it would be almost borderline criminal not to mention the IBM and Red Hat, not so under the radar, $35 billion acquisition from last July. I'll get more specific outside of the foundational shift in strategy here with an example of an initiative, IBM's initiative in the edge computing space that was recently open sourced called Open Horizon. This was part of a contribution to an effort within the Linux Foundation to create an open framework for edge computing that functions as a core component and boosts the overall value of IBM's Edge Application Manager. But what I really like about this example is that it gets to the heart of the seemingly opposed but actually interlinked contradiction between what it means to be open source and also proprietary, how you can have communities that collaborate in some ways that also compete in others right next to one another. And so with this example, many of the major enterprise tech vendors such as Dell, HP, Cisco, and Intel have gotten on board with Open Horizon, while some of the other large public cloud providers such as Microsoft and AWS have not, or haven't yet, I should probably say. Another reason why the IBM example here is so impactful is due to the specificity that it invites when dealing with individualized use cases, prompted by the demands of verticals, or in some cases even sub-verticals. Manufacturing, financial services, and healthcare are just examples of ones that are famously complex and nuanced. One other example outside of that occurs in retail, again, related to Open Horizon, which became part of Intel's Open Retail Initiative. And the push behind the relationship here is that Open Horizon will be able to influence an entire ecosystem of vendors who have now embedded Intel chips into retail equipment. The result is the enablement of more latency-sensitive short-term response and the longer-term analytics that extract the information from digital signage, point-of-sale terminals, and things like kiosks. So the overarching message here is also that there is no hard or fast rule as to how partnerships, alliances, and ecosystems work. Customers, as they figure out what their own priorities are increasingly requiring the freedom for choice and flexibility, and those who provide it have no choice but to bend. And the lock-in approach to one particular vendor is nothing but myopic from a technology perspective, as well as when you take into consideration the need for more choice and flexibility overall. Another example of how this is the case emerges when it comes into infrastructure agnostic approaches. Companies are demanding the freedom to choose their own destiny at their own pace and for foundational elements such as infrastructure. This resonates in situations where SaaS vendors with API capabilities and marketplace partners promote customization. So with companies like Salesforce and the Microsoft and AWSs of the world, the small players bring this layer of differentiation, customization, and specificity that's really necessary to differentiate, as well as quote-unquote land and expand across and within specific verticals. The case then only becomes more true when you apply the lens of geographic specificity as it applies to things like local regulations, like think Brexit, GDPR, data sovereignty guidance, and even political implications that really span across so many different factors. The larger strategy here at times when it comes to the importance of being vertically specific is that some niche smaller players aim not only to partner, but in some cases, and increasingly so, be acquired by larger entities. And what they're doing here is actually orienting their technologies to be developed to fill in specific known gaps. Again, the idea is that it's not so much that a large player can do everything in a very broad market, such as financial services, but they have to be differentiated, and not one player, no matter how large, complex, and smart they are, can really do anything. One example that kind of fits into this in terms of partnerships is between Google Cloud and Deutsche Bank. It's a multi-million-dollar partnership to develop new business models and initiatives, technology-based financial products. And with this, what Google Cloud is doing is deepening its portfolio, specifically of financial services, and extending its reach into the sector by applying existing capabilities in data science. And then on the flip side, how Deutsche Bank benefits is from just the innate innovation engine that comes from partnering with someone like Google and just inroads to new customers in general. ServiceNow is another example that involves several GSI partners across industries, and that Catie will cover in greater detail in the marketplace section of the discussion, and will delve further into the communities and ecosystems enabled by such demands. The blending between these hyperscalers and smaller players that fill in capability niches is also something that's highlighted by some really recent research that was published last week that my colleague Stephanie Long and I did around the edge computing market. So as part of this report, in the course of profiling leading and emerging vendors, we spoke with some executives at Siemens who last year further extended their position of leadership in the manufacturing vertical. Now, this was done with the acquisition of Pixium, which, despite being founded just 6 years ago, turned out 6 years is a really long time in tech terms, eclipses a bunch of other providers in their expertise and successful application of use cases. And what I really love about this example, as it wraps around the benefit of partnerships from an IP perspective, as well as vertical integration play, while also highlighting the fact that partnerships in many instances do preempt these acquisition plays. So now I'll pass the mic over to Catie, who's going to dive a little bit more deeply into examples that touch on the elements of vendor agnosticism and hybrid workloads.
Great, thanks, Nikki. So as we were kind of mentioning and building off of that theme, vendor agnosticism is really key in today's IT landscape. Customers are trying to avoid being tied down to one vendor, and to encourage cloud migration and acquiring new workloads, vendors really realize that they need to accommodate for this trend. And as a result, we're seeing co-opetition evolve. So despite competing at one layer of the stack, vendors have strengths in other areas that can complement each other. And in a lot of cases, it helps them chase incumbents in a pretty saturated space, think AWS. So to kind of highlight that, we've put together some examples of these partnerships. First, we want to call out Oracle. Oracle has been really clear about its plans to capture AWS, especially in more recent quarters. They're expanding their data center footprint, and some of the high-profile tech alliances is kind of a pivot for them that they're leveraging to kind of displace AWS. Last year, Oracle partnered with Microsoft to allow customers to run workloads across Azure and OCI. And what this does is really provide more flexible deployment scenarios for joint customers. So for example, Oracle applications can run on Azure, but also leverage Oracle databases deployed on OCI. So despite competing with Microsoft in infrastructure, databases are also a primary area of competition between Oracle and AWS. So Oracle's ability to fight for these customers looking to upgrade databases on-prem will be an edge for Oracle. And to that end, the relationship's just over a year old, but the regional footprint of these interconnection facilities is expanding. There are now 6 globally. And similarly, Microsoft and SAP's partnership is cooperative in nature, as Microsoft and SAP compete in the SaaS space. But despite that, Microsoft hosts S/4HANA workloads on Azure, and this allows SAP to facilitate cloud migration and expand its reach, as well as its professional services capabilities as they kind of help clients shift to Azure. And this is also a really big win for Microsoft because many other hyperscalers are looking to compete for SAP workloads as well, and there's clearly a big opportunity around that. And then lastly, we want to call out IBM's relationship with Google Cloud, which brings power to Google. This is interesting because previously IBM was just selling power-based cloud instances to its own customers. So expanding it to a competing platform was interesting for them to do. But as we said earlier, IBM's kind of shifting its approach, trying to be more flexible, infrastructure agnostic, and that was highlighted with Red Hat. So, but it's still very beneficial for Google because it helps them get in front of enterprises looking to migrate workloads to Google Cloud. And now we're going to shift gears a bit, kind of moving into the SaaS space, highlighting marketplaces. Generally, marketplaces aren't huge revenue centers for cloud services and software, but they're still worth calling out because they play a really big role in overall go-to-market strategies that leverage direct and indirect sales. So just some examples of some we've been tracking. Red Hat Marketplace, this was launched at Red Hat Summit via virtual event held in April. It actually just became generally available last week. But what's unique about this is it's just a commercial shop for open and fully managed software, but it's certified for OpenShift. So this will be appealing to existing OpenShift customers and adopters of software that want to deploy anywhere. So again, this just highlights Red Hat's open approach and how IBM is absorbing those capabilities as well. And ServiceNow is another call out because, as Nikki was mentioning, they have a very industry focus and they're leveraging partners for that. This is part of the initiative to revamp their go-to-market engine and really scale the top line. We see them emphasizing the Now platform. They have the Built on Now partner program. So that is them trying to deliver monetized software through system integrators and kind of expand that presence in key verticals and place their solutions in front of LOB customers and as well as the C-suite. They emphasize relationships with Accenture and Deloitte, and that'll be really key in helping get ServiceNow in front of those customers. And so to cement that, they recently launched an industry marketplace with leading SIs, including Accenture and Deloitte, but also smaller players like Atos and DXC. And this follows ServiceNow's formalized partner program, which is over a year old now, and we see financial services and telecommunications as initial focus verticals, but expanding into other industries as well will be part of that go-to-market strategy that will help them scale. And then lastly, SAP, from a SaaS perspective, is really trying to drive customer stickiness and investing in the marketplace. The streamlined partner performance is part of that. Historically, they've kind of trailed other marketplaces, but they are expanding the capabilities of it and leveraging the partner ecosystem aside that, SAP also recently announced updates to App Center, the marketplace, to help achieve this, allowing partners to track solution performance and engagements with customers. They launched a new framework around it to help partners bring solutions onto App Center, and it also outlines new programs that will support successful partners with go-to-market support and customer-facing validation by SAP. So this includes premium certifications in areas like integration testing, cloud quality, and security. And industry focus plays a big role here as well. SAP launched Industry Cloud recently and have expanded its relationship with IBM around that. And they initially plan to target industrial machinery in manufacturing with that. So that's something that we'll continue to track as well. And with that, I'll pass it back over to Nikki to discuss some global trends.
Great.
Thank you.
Nikki, if I could, just before we do that, the subject of marketplaces has been coming up, well, for a number of reasons. Obviously, with the shift to COVID, the virtual selling model and marketplaces can, clearly fit in that category. Is aligns to the type of behavior that everyone is changing and doing from a distance, but it goes more deep than that. When we've dug into some of what the vendors are seeing in terms of the role of these marketplaces, there's a couple different things. The scalability of licensing. So with layoffs and, the airline industry is a good example, being able to have a scalable pricing model for some of the software applications that the workforce is using, and doing that through the marketplace makes sense from both a scaling up perspective, but also a scaling down perspective as well, right? So they're not locked into the long-term commitment and costs associated with security packages or different productivity applications that, as they react and scale down the size of their workforce, they're able to see a lot of cost benefits there. The other thing that we've heard quite more frequently is the kind of pre-negotiated pricing, where transacting through a marketplace, the scale is above what any one enterprise could look to achieve on their own in terms of negotiation and bringing the unit price down. So that's available for customers of all sizes to take advantage of that. And then lastly, from a contracting perspective, so for the marketplace provider, they're able to use that as part of their own selling motion and bundle in credits and guaranteed activity that's going to take place through the marketplace for other software packages beyond their own titles, but be able to do that in a pre-contracted, committed way. So it adds a lot more. They may only see a portion of that in terms of their own revenue, but it's increasing their connection to that customer and increasing the overall level of spend that they're able to contract and transact with those customers, leveraging the power of the ISV ecosystem and the marketplace offerings that their partners are providing. So with that, I'll hand it back over to Nikki to head on to the next section.
Thank you, Allan and Katie. And the topic of partnerships and ecosystem merges almost seamlessly into the next topic of global expansion and new markets, especially when it comes to markets that have high barriers to entry, whether it's due to historical or political reasons, or maybe regulatory factors, or in some cases, all of the above. As we've emphasized, partnerships historically have been, but are increasingly now a critical component of many vendors' international expansion plans, and are being served more and more so by targeted ecosystem and channel programs, actually established programs, such as open gateway programs, for instance, are becoming more and more common, and the hand-holding that one company can do to help circumvent regional restrictions and data sovereignty laws, or just better navigate through particularly thorny issues, is becoming more formalized and prevalent. I'll focus on one example that I think exemplifies kind of all of the above in the form of Alibaba. Why I think this is a great example is that it really illustrates the win-win kind of dynamics that international partnerships can bring, especially as it relates to helping foreign vendors crack notoriously difficult markets. China, no shocker there, is definitely one of these. Partnerships are a critical component of Alibaba Cloud's international expansion and are being served by targeted ecosystem and channel programs across regions like EMEA, as well as countries like India, as well as even within APAC itself. And the benefits here are really twofold. Alibaba on the one side provides the guidance, connections, and support to enter in one of the thorniest and highest growth markets in the world. And Alibaba in return gains access through relationships with leading vendors such as Salesforce and SAP, serving as the infrastructure backbone for international SaaS and vendors that want to expand or deepen their operations in APAC. The establishment of their partnership program, which was officially formalized last year, China Gateway, formalized the strategy and functioned as the official channel now through which Alibaba Cloud contributes its technology to help foreign businesses access the Chinese market while gaining relevancy as well as strength in other regions. Now, beyond partnerships, the expansion of global infrastructure is another common thread, as the fact that the revenue impact from COVID is not nearly as severe, and in some cases has even revealed some upside. So some of the growth figures on this chart and some of the facts will support that cloud vendors are in fact continuing their previous plans, or maybe even in some cases augmenting their plans to expand their footprint across all of the regions, so EMEA, North America, APAC, and there are very few conflicting examples of plans being mitigated due to economic pressures. So I wouldn't say there's immunity to COVID, and Allan will delve into this much more deeply later on, but it's not like there's this immediate fallout or panic when it comes to cloud expansion. Expansion strategies that fold in partnerships, such as with global telecom operators, is one trend specifically worth highlighting, particularly as 5G continues to augment the dynamics of digital transformation, no matter what geography that you're in. So before Allan expands upon the COVID impact, I'm going to hand the mic back to Catie, who will provide further detail on footprint expansion by region with some specific examples of investments and trends from an IP as well as an infrastructure perspective, as well as some interesting developments in the innovation center space.
Great, thanks, Nikki. So now we're just going to highlight how some cloud service providers are expanding their data center footprints. Just some key callouts. Again, just kind of reiterating Oracle and how they're trying to go after AWS in infrastructure as a service, and bringing that availability to more customers is a key part of that. They're really kind of head to head in terms of availability of live public cloud regions, but it's worth noting that this is impressive, but it doesn't necessarily equate to matched capacity. And then Alibaba is obviously a big call out, despite its in-country ties. They have a really strong global footprint and are looking to expand that as part of their $28 billion investment in their cloud infrastructure business. So we expect that to hit EMEA as well as broader APAC. And then the big three are obviously continue to compete, expanding their footprints all over the globe, particularly in Europe and Latin America. But Microsoft sticks out as trying to upskill local talent in some of those emerging markets. And then you could argue that IBM is a bit unique here just because they're in a bit of a transition period under new leadership and trying to operate alongside Red Hat. And as part of that transition, they announced they are closing some legacy data centers to be able to reinvest in what they call multi-zone regions as part of their hybrid cloud strategy. So IBM currently has 6 multi-zones, 2 in each major geography, but we see that really scaling up under new leadership. And then in addition to these expansions, we're also tracking innovation and transformation centers. The services players, the large SIs, play a big role in this, leveraging IP from the big technology partners like IBM for developing horizontal solutions, including those around cloud. So that kind of speaks to the role these firms play in promoting and educating existing clients on cloud technology. But it also works the other way. We're also seeing cloud services and software vendors leverage SIs in similar ways. Salesforce is a good example of a company expanding its footprint here, especially with partners like Accenture. Accenture provides it with an additional 15 innovation centers globally. And then a lot of the smaller SIs like Cognizant and Wipro are acquiring these niche Salesforce implementation specialists, and they happen to specialize in a certain region like Europe. So we could see the smaller SIs trying to follow in the footsteps of like what Accenture is doing with its Salesforce practice. And this really helps Salesforce, whose engagements are becoming increasingly high touch and helps them expand customer share of wallet. So just in terms of those trends with vendors with strong data center capabilities, they really get that up and running and then start to convert investments into value. And pursuing innovation centers is a big part of that. And as cloud evolves and in general becomes higher touch, we see that as a really important piece. And with that, I'll pass it over to Allan to talk about COVID-19 impacts.
Great, thanks, Catie. Let's see. Yeah, so we'll go through some of what we're seeing. We'll actually start with the performance trending for some of the major cloud vendors. Now that we had 2Q19 was in a lot of ways kind of the first full quarter of COVID impact. So there's a lot of uncertainty coming in after 1Q was kind of a partial quarter of impact. And overall, I think the sense from the market and the vendors that we track is that it wasn't as bad as they had feared. They were able to adjust in a lot of ways and we'll go through some of the selling techniques and investment strategies that mitigated some of the impacts and in some ways provided benefit in terms of higher profit margins as they go through this period. And there's also a greater sense of optimism having gone through 2Q that it's not going to be, again, they could even start to see a little bit of an uptick in terms of 3Q and 4Q growth rates, not to where they were historically, but a little bit better in some cases than they saw through 2Q. So it could be that second quarter was actually the trough of the economic impact of COVID for some of these vendors, which is quite a fortunate situation for them to be in. If you listen to VMware's earnings call, I think it was Pat Gelsinger put it well that IT overall is faring better than the economy in general. Within that, software and cloud are faring even better than IT overall. So there is, for these vendors, they are, if not feeling fewer impacts, in some ways even benefiting from some of the shifts that the pandemic have brought on. And so there is expectation for beginning of a recovery in the second half of 2020, and then due to some of the longer term changes, which for a lot of customers come in the form of accelerated cloud adoption, continued use of more virtual working. We do expect there to be more of a return of some of the work from home folks in 2021. But we think that there'll be higher levels of remote working that persists regardless of what happens in terms of public health after going through the change, the transition, getting all the technology up and running for folks to be productive virtually in large segments of the workforce. That a lot of that will persist. It's still yet to be seen, but for vendors that provide cloud-based tools, remote desktop, those types of environments, that's going to be something that drives long-term opportunity for them. And a lot of that's based on the cloud platforms that we have laid out in terms of the vendors here across Google, Microsoft, and AWS primarily. And so those are things that are going to have a net positive impact for them over the long term. So that's kind of the landscape of what we saw from a financial results perspective and some of what we expect in terms of, and the vendors expect in terms of later in this year and early next. So here we'll go through some of those changes that have been made to the go-to-market efforts and what some of the takeaways are in terms of how to effectively go to market and sell in the current environment. So in terms of the vendor examples, really, if we look at those first, IBM and SAP have been forced to react, I think, more than a lot of vendors in the industry, given their traditional sales model, heavily based on travel, in-person events, meetings, those types of things. And so that's been a challenge for them to continue to be productive, but do it in a way where there isn't as much in-person activity and meetings. So for IBM, one of the big, service tools that they've been using are these virtual garages where they still have the physical locations, but obviously attendance is limited. And so they've shifted nearly 100% of their services workforce to be remote and to continue with those proof of concept and consulting engagements that are such a critical part of the type of deals that they do in the cloud space, and using kind of that garage as a virtual overlay for that activity. Similarly, SAP, I think there was a ton of uncertainty heading into the quarter. They were able to push a lot of their cloud engagements that were finishing up in the first quarter virtual, push those live in a virtual manner, so they continued to see that activity, especially around S/4HANA, which is a critical pillar of their current and future business. But the challenge is going to be for those earlier projects. And I think they saw a lot of success actually continuing to move things along. Obviously, there's an impact primarily on the license side because those are more challenging engagements to get traditional license on-prem projects through completion and production. But especially with the cloud projects, they were able to continue momentum and took a program, Move in Motion, which brings together the SI partners, the critical kind of partner for them to work with customers, not just on technology, but on business change, and to move that engagement to a virtual model was something that they were able to do effectively and continue to grow and shift over to more of a subscription cloud-based model. Now with ServiceNow and Microsoft, these are two vendors that have actually seen benefit in a lot of ways from the COVID-19 impacts. ServiceNow kind of orchestrating workflows that obviously change as the environment shifted, and so they've played a big role in terms of facilitating a lot of that and benefited in doing things remotely. And then Microsoft with, they're both challenged with shifting themselves to a virtual selling model, but also providing a lot of the tools that enable their customers to do more things, that perhaps weren't as big of a focus of the sales motion previously. So partially with Dynamics 365, but really with the LinkedIn tool set is a good fit for a lot of the shifts that customers out in the market are needing to make and change the way they sell. And so they've benefited by providing LinkedIn solutions that align to those needs. Some of the kind of key implications that we've seen based on, really 1 quarter of full results and strategy changes is that, for a lot of the advisory selling, that's shifted to a virtual model. That's critical for the long-term pipeline, which I think is the biggest risk for cloud vendors. With the annuity model, no matter what happens, they're going to have, a lot of the work and results reflect things that have happened over the past months and years. So it's really about getting those early stage opportunities and filling that pipeline for things that are going to be driving revenue next year and in future quarters. So that's really critical to continue that pipeline movement. Cost benefits, I mentioned scalability with some of the marketplace value earlier. And in this type of environment for a lot of customers, anything that's scalable that reduces cost is of value. And even though it has hit, when we looked at those results on the prior slide, certainly there was a decrease in 2Q growth rates for a lot of the cloud vendors. A lot of reasons for that, but part of it was, you saw it with the major cloud platforms, that they're working with customers now to be as efficient as they can, to reduce the amount of expense that some customers are recognizing through running workloads on top of these cloud platforms. And vendors like AWS called it right out and said, we're doing this actively to increase our long-term engagement with customers, even though there is a short-term negative impact in terms of the revenue that we're generating with some of these clients. It's the right thing to do for the long term. And so selling to reduce costs, to optimize services certainly resonates today. And so you're seeing more of that in terms of the go-to-market method. From a cost savings perspective, that's been the other consistent thing that's been called out in vendor earnings. So being able to minimize sales and marketing expense has shown up in terms of increased operating margins for a lot of vendors as they travel less, they do fewer events. And so it's going to be they're going to have a lot of data to look at when conditions change. What is the value of in-person events? How much should they be spending in terms of the marketing budget on different activities? Because they're going to be able to see what happens when they reduce certain types of investments, and really get a good case study for the ROI for some of the traditional marketing activities, which, the challenge is always how do you measure and look at prove the effectiveness of some of those investments where it's really just something that's been done over a period of decades in terms of the go-to-market. Now they can really kind of take a step back and see what makes sense in person, what makes sense, is more cost-effective from a virtual and some of the other means that are available now from a marketing perspective. The last thing that I'll touch on here before we open it up for questions is the challenge for a lot of these larger vendors to sustain the business models of their smaller partners. Not every vendor is as reliant, but certainly if you look at companies like Microsoft, a lot of Google Cloud's recent traction and growth is coming from resellers and partners, and a lot of times they're smaller companies that lack the financial resources of their larger cloud firms, obviously. So programs that allow them to make some of these transitions and be as effective as they can with these virtual models when their business models to a large degree have been disrupted, and they don't have as much. So the challenge has always been getting them to focus on their own IP, whether it's developing solutions that ride on top of platforms, provide some layer of customization, or doing that through services. Really getting away from just that resale model as a source of their business model and revenue streams has been a long-term challenge, and it's become more pronounced in the current environment. So I haven't seen a lot of, there's been concessions in terms of fees and requirements to participate in programs, but I think that's really a longer-term question of how do these smaller partner firms that are becoming much more important from a go-to-market perspective able to survive and eventually return to growth again as part of the overall go-to-market strategy. That's more of a long-term challenge that has been exemplified in the COVID-19 backlash. So with that, that's the content that we wanted to go through. Want to pause and see if there are questions. I think there's a couple that have come in, so we can start with those, but feel free to submit things that you're interested in through the Q&A, and we'll spend a couple minutes going through those now.
Hey, Alan, I'm noticing the first one that came across my screen is from Michael from Juniper. So I'll just repeat the question to everyone and then provide my answer. And Katie and Helen, please jump in as needed. So the question is, I've heard that banking and financial services is the most conservative as it relates to moving to the cloud. I've also heard that AWS is one of the vendors working toward gaining the majority of the market. What about IBM? It would seem they have a hand up with mainframes to cloud. Is that incorrect thinking? So in terms of the conservative and the market perspective, I would say definitely yes, financial services is at the top of that list, closely followed by or maybe paralleled with healthcare, especially given the very stringent scrutiny that's being placed on anything related to healthcare, especially these days. It's worth mentioning here that IBM recently launched a financial services ready public cloud, and they're working with partners to achieve that. So that's definitely a focus for them. And then just in terms of the vertical, again, financial services is a focus area for IBM as they want to secure destination for customers to get off the mainframe into the cloud. So that would be kind of my short answer to that question.
Yeah, I'll just add to that really quickly. I think that the main part of the strategy is just optimizing loads for the public cloud and for a particular industry. And financial services is definitely one of those industries. Like Nikki said, with the launch of the financial services cloud, and you're probably seeing IBM really uptick partner activity with the services guys, and just kind of highlighting that strategy to, push out Red Hat and the cloud packs to more customers. So I think we'll see partners play a really big role there as well.
Yeah, and I think the other thing that I've seen in the financial services and banking is that it really comes down to the workload level. We've done interviews with one of the larger banks where cloud is a great fit for some of their long-term analytics data. So, market close data going back for decades, that they would be able to run analytics for long-term trends. And it's not as time sensitive. It's certainly nothing proprietary to their clients or their business. So that was mentioned as just a great fit for large stores of data that they use, but it's not part of the core kind of transaction processing platforms that will probably remain on the mainframe for a while. Could also be, there's been interest, actually a lot of interest from recent customer interviews and adoption on some of the private hybrid platforms like AWS Outposts and Azure Stack for some of the some cases where either security or latency, whatever reason, they want that computing closer to their own data centers. And so we've been surprised with how common it is for organizations of large size, not all in banking, but historically conservative organizations to have adopted at least one of those platforms as part of that kind of middle ground of cloud, where it's not purely public cloud, but they still get some of the capabilities and cloud benefits through those solutions.
Great. Okay, I'm seeing another question from Kevin from Intel. Actually, probably like a two-part question, inquiring about high-performance computing workloads moving to the cloud, which, Allan, I think you kind of addressed just now, and as well specifically AI workload trends into the cloud and why. I mean, the number of times I think that we type AI or ML into a given vendor report these days, you can't even count. So AI and ML and how that also dovetails with the importance of automation are all very linked, as well as the proliferation of edge computing technology as well. So in terms of just volume of trend, yes, AI is becoming a huge focus when it comes to innovation centers innovating around AI, as well as when it comes to specific AI work partnerships, and just in general, it's a hot topic, and we don't really see any abatement of that trend.
Yeah, I mean, I think high performance compute workloads in general there's still hesitancy. There's not a lot of proven use cases for a lot of customers that have been successful. So there's certainly availability in public cloud platforms for those types of cases. But it hasn't been the best fit in terms of customer perception and actually production use for a lot of them as of yet. All right, let's see. So there's a question, I'll just throw this out there in terms of insights on the healthcare vertical migration to cloud. What type of uptick, or is this increasing? I can start and then my colleagues can probably jump in. Yeah, absolutely. I think a lot of, let's see, as we were interviewing customers and looking at vendor strategy, there's been a lot of acceleration of cloud adoption within healthcare due to the immediate conditions of the pandemic, as well as a general sense of getting the solution in place rather than letting regulation and data privacy slow down things to the same extent that they have. And so I think you definitely have in the shift to a lot of the telehealth needs that have come up has been huge. So I think you've seen changing, and this is one of the biggest things that we've seen in industries like insurance and banking, is as well as healthcare, change in terms of the mindset of a lot of the IT practitioners, where they haven't been as accepting and forward with shifting things to cloud, despite a lot of the HIPAA and other compliance issues being addressed over time by the public cloud providers. You saw kind of an acceleration of that cultural shift in the aftermath of COVID, and we think that that's one of the things that will have a long-term implication for that industry. They're not going to go back to the same type of solutions once the effects of the pandemic subside, for a lot of reasons. I mean, who knows when this is all going to be over, first of all. But there is value being recognized, and the flexibility has been something that has been, they've seen that value in their use over the past couple of months. All right.
Yeah, Allan,
there's a couple other questions. We can probably take those offline and follow up so that we're able to get out on time. It's been a pleasure having everybody. If you didn't know, we do have another webinar coming up next Wednesday, September 23rd. Ezra Goddell is going to take us through PCs in a pandemic, so another COVID-focused discussion, but this is a subject around PCs and devices. So be sure to register and tune in for that if that's of interest. There will be a replay that's sent out, and if you would like a copy of the slides, feel free to reach out to any of the presenters on today's call, and we will forward that over to you. Thanks again to everybody who joined, and we will talk to you the next session.
Thanks, Allan. Take care, everyone.